I'm Catherine Ross, and I'm here live from the NYSE with Jim Cramer. Jim, I want to kick off our show by talking about Elon Musk's tweet last night. Now, he called you shallow fake. Can you give me that definition of that?
Well, I don't know. I mean, it's always soul-searching when you've got Elon, late 40s man. My father, when I came home, second grade, Mrs. Turoff's class, I got a B in history. And my father said that I was faking. I wasn't doing enough work. That's the last person who's basically accused me of being a shallow fake. So it's kind of Shakespearean, Oedipus-like. And I've been struggling with it because do I want to be a deep fake, meaning that I am a rigorous fake? Or a shallow fake means perhaps I have work to do in order to be less of a fake, but not just my father. And it made me feel that I was going to be tracked in the dumb class, as anyone accused me of this level of lack of rigor. And I was tracked in the dumb class. I was tracked in the fourth row of the different tiers at school, and didn't emerge from it until I went to Harvard. So I think that Elon is basically offering a soul-searching moment for me, and I've come back and decided that maybe he's right. You wake up in the middle of the night and you have that dream where you're fake. I've had it. So there's something deep to even his shallow.
All right, Jim, I want to switch gears because I want to talk about Apple, which is reporting earnings after the bell. And, well, what's one thing that investors should keep an eye on when
Apple thank heaven, is down, ahead. I don't expect a great quarter. I don't expect a great quarter because I say that because what they're trying to do is emphasize the watch. They're trying to emphasize, your pods. They're trying to emphasize everything but cell phones. And the industry of analysts only want to talk cell phones. And so if you don't do the cell phone number, they're going to hate you. I wish the stock were at 170. I think that I'm defending Tim Cook every single minute on Twitter. What is there to defend, though? I mean, it really shouldn't be. I shouldn't even have to defend it. The stock's been incredible, but just be aware that this is a 5G play. So you sell it now, you're playing a hedge fund game. You have to sell it now. You have to bet it pivots down to 160, 170. Then you get back in because 5G is 9 months away. I don't want to play that game. It's too hard. I think you should own Apple, not trade it. But be ready. Prepare. I think what you should do if you hope for the best, prepare for the worst.
Now, that's kind of similar to what you said about Google yesterday. Now, after the bell...
I did. I mean, I knew that they would screw it up.
After the bell today, what are two other companies that you're watching that will be reporting earnings?
Well, we're just in general, Apple's going to overshadow anything. I'm trying to figure out whether I even care about anything else right now for Apple, but I've got a bunch of companies that I'm working on that are reporting today, including Zebra, by the way, down 13, which is really rather extraordinary. So I don't know. I mean, I do my show tonight as late as possible because of Apple, and then I check the other companies. I check the other companies after a mezcal, Bar San Miguel. So I don't know. There's a bunch of them that report, but I'm really looking tomorrow at AMD because I have Lisa Su on, and she can change the entire narrative, I believe, that was wrecked by Intel. I think we're going to start coming back and saying, well, NXPI was good. Maybe Broadcom's going to be good. Xilinx probably got oversold. That's a bullpen name for Action Alerts. So I've got a lot of stuff, a lot of irons in the fire, but it's really Apple night.
I just want to remind people that Apple is our real money stock of the day, which means that Kevin Curran, Stephen Guilfoyle, all of our real money guys will be writing so deep into this. I mean, you really need to understand before the earnings what to expect, especially after Alphabet's miss yesterday. And
Alphabet's miss has to be talked about. That's kind of what I'm possessed by.
And we're going to talk about it. It's another topic that we're going to hit.
I'm infuriated. This is a visceral game, and sometimes it's not a game at all. Shallow fake. I didn't need that on top of the shallow fake. Go back to second grade. Remember being on the bus. Hopefully my father wouldn't hit me.
I just want to remind people, too, that TheStreet will be having a live blog with Eric Jonza, who Jim is a big fan of. Right. And we'll be covering wall-to-wall on what you need to know on Apple, on TheStreet.com, and I'll be covering it on Twitter. Now, Jim, I want to switch gears.
Twitter was very interesting because Twitter was what Alphabet has to go be. They have to clean it up.
Jim, I want to switch gears because I want to talk about, we're in the middle of earnings season. We've got market movers. You listed 3 today.
Yeah.
So in 60 seconds.
They're just coming in. Oh, Pfizer's up.
Pfizer's up? Why is Pfizer up?
Well, you know what? Pfizer actually has, it wasn't that good. They beat by a penny, but I guess in a world where Lilly got crushed, people liked it.
In 60 seconds or less, what about McDonald's?
McDonald's was really good. You know, people are always looking for something. They're asterisk it by saying that there was a bacon burger that was good. That's ridiculous. He's digitizing the whole operation. He's doing an incredible job. I like it.
What about GE?
Good man.
Good man.
Much better than expected comps.
What about GE, which also beat?
All right, look, let's not get too excited. GE had a timing issue. The turbine orders came in a little bit better than expected, but that's pulled through later in the year, and some of the customers finally paid a little bit ahead. So you've got a turbine number, a power number that's actually rosier than it should be. Aerospace was terrific. I liked healthcare, but don't get too carried away. There's no reason to say, I've got to buy this right now.
Pfizer's up. What about Merck? They also reported earnings.
I think Merck should not be down. Merck was good. Keytrude has taken it to him, but people want to rotate into Bristol Myers because it's cheaper than Merck.
All right, Jim, let's...
Really? Ouch!
Before we go, I want to talk to you about Alphabet, which you mentioned before. Yeah. Now, yesterday you told investors that they always find something that they don't like in Google's earnings. So I'm curious, what... The reaction that we're seeing, it was down 8.6% this morning. Is that an overreaction?
No. Member stock was up 10% going in. This is really a case of when you're the best in the class and you get a B, again, thinking about shallowfake, you get a B, people hate you. If you can go and be NXPI and be a C student so they get a B, people applaud you. There was no humility on the Alphabet call, none. Everything was blamed on currency. I hate companies that show no humility. Now, Mike Roman yesterday, who was on Mad Money, this is the CEO of 3M, he showed humility. Unfortunately, the stock's overvalued, and the stock's getting hammered. Today's going to be a down day, I think. Apple down, McDonald's reversal, and the bacon. The Baconator at Wendy's is better than the bacon burger at McDonald's, just so you know. My wife has verified that. But I think that today's one of those weird days where Alphabet is in charge, which it shouldn't be. But it was very disconcerting. I mean, the best tech stock is IBM because they raised the dividend, even though they're buying Red Hat. So today is a ball of confusion, to quote a Motown sage.
Now, for investors who are wondering what they should make of Alphabet's earnings, Jim had a great column over on Real Money this morning where he talked about whether or not it's overvalued.
Yeah, I am so upset about Alphabet. I really am, because we could have nailed it. We're up so much on fractional alerts, and yet I do believe that maybe this is the wake-up call they need. Maybe their complacency is over. This is about being complacent. There's no room for complacency, and they're complacent. They're fat and happy. They've had too many McDonald's bacon burgers.
Now, I gotta say, Jim, I think that this leads into a great investing education question, because you called the miss yesterday for Alphabet. So I'm wondering, what are 3 things that investors should look for to know whether or not a company will miss on their earnings? Okay,
well, first, what you want to do is it's been in a tremendous downturn, and therefore it's going to be viewed as negative no matter what. So that's really important. That's the United Health issue, and boom, it just keeps going down. If it spikes ahead, okay, that means you're going to be screwed no matter what, unless there's inside information, of which there's almost none now because you do go to jail. In the old days, a spike ahead meant that the quarter was going to be really good. And if the stock is down 3 or 4, that gives some leeway for an analyst to say, you know what, this is your opportunity. I'm going to raise my price target. So you would love 3 or 4. If Apple can do the religious conversion of making people believe in the service revenue stream, then you'll get that move. But it's a religious conversion, and I don't want it to be like the Inquisition. I'd like it to be more voluntary.
All right, Jim.
3M, man.
Now
Can't touch that 3M yet.
You can't touch that 3M?
Flake. No, you can't. It's too early.
All right, Jim, now that's all the time that we have for today. For all of you watching on TheStreet.com or on Facebook, we are now jumping over to our Action Alerts Plus.
It's going to be good because this is look, Alphabet isn't humbled. I am. Watch us.
Yeah, watch us. We're going to talk about Alphabet. We're going to talk about other holdings in the Action Alerts Plus portfolio. You can find us over on ActionAlertsPlus.com. I'm Catherine Ross, and we'll see you guys tomorrow.